Top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
It's a sea of green across the Asian markets.
And then the 20-day comes in at 48,164. These are levels where the market will test. On the Nifty, we are starting at 22,288.
So if you look at the total opportunity capacities for us, we've already created capacities of 45 million for smartphones.
We have a large order book. We have a healthy order book which we have to execute. We are ramping up on capacity.
To that he said, yes, there is marginal impact and specific to a certain category such as apparel itself.
In the red now for the benchmark indices after opening higher. JP Morgan has upgraded Bharti Airtel to an overweight and raised the target price to 1,500.
While IMD is looking at an above normal monsoon at 106% of LPA, SkyMed talks about a normal monsoon of 102 there.
Had a sharp fall in the last couple of minutes, right? And Nifty has fallen. It is down 122 points.
Well, that is the day so far, and I'm sorry to say that it's kind of once again a repeat of what we've had for the last many days, which is good global cues, and especially good global cues last night, but the market just willing and refusing to really pay attention to any of that. Market's down, last I checked, almost 100 points, a third of a percent lower, and we'll talk more about this, what's going on. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues, Surabhi and Rima. Guys, hi. Afternoon.
Hi, good afternoon.
You know, yesterday at least the mid-cap index held up right till the end.
Yeah.
But today, even the mid-cap index has come off. Now it's just up close to about 0.3%. So it's not just the large caps which are now in the red, but the mid-cap index too is erasing its gains.
No, absolutely. And, so let me just quickly put out a few points here, because it's more of the same. I mean, there's no new news flow or big earnings miss, or it's across the board. There's some pressure which is coming through. So good global cues, especially the rates move, the dollar move, NASDAQ up 1.5% plus, nothing. Support for the Nifty now, you got to sort of pay broadly 22,000, right? It's about not very far away, about 120 odd points away from where we are, 100 points away. But 22,015 is the first support. It's a retracement, basically, of the small rise we've seen. And then, of course, that trend line from the lows of last year, the rising trend line, which was earlier, it was at about, it's rising. So earlier it was 21,950. Now that number is 22,000. So 22 ballpark, a round number, that's a support. Bank Nifty is down 0.5%, but it's a PSU space which is selling off. The Nifty PSU Bank Index is down 2%. And we'll put out more details with Abhishek as we go along. Market breadth, one stock up to one stock down. So it's pretty evenly matched out there for now. Rima.
In terms of the PSU banks, so State Bank of India is down 2%, but even the others, like a Bank of Baroda down 1%, IDBI Bank, Bank of Maharashtra, UCO Bank, across the board, you are seeing a fair amount of selling pressure. Autos are on the back foot a bit. Maruti Suzuki, Tata Motors are the top two Nifty losers. Though that said, M&M is reacting very well to its earnings. So M&M is now pushed to a gain of about 1%. And IT stocks are holding up, courtesy perhaps the up move that we had in NASDAQ. But just take a look at Hindustan Aeronautics. That intraday will come up for you on your screen. Just reported their numbers and the stock has skyrocketed. It's now up close to about 5.5%. This week, it's seen a gain of close to about 14%. And I think the bottom line of the company has come in at 4,300 crore, which compares with 2,800 crores. Street likes the numbers, and look at the reaction on Hindustan Aeronautics.
Yeah, that's a very, very solid one. I mean, it was anyway a good PSU day, and then HAL's numbers are absolutely looking good, and we'll get you more on that as we go along. But overall in the broader market, it's actually the PSU space which is once again, kind of standing tall, trying to find some green. So some of the railway stocks, for instance, once again, they're very buoyant. Aircon is up about 6% or so. You look at some of the power lenders, PFC, REC, they're having a good session. Remember, the numbers are very good. I mean, good asset quality, decent margins for, most of these power financiers. And the stocks are seeing some more traction today. SJB and HUDCO. So basically, once again, this is more about PSUs. The other sector, which is still finding some traction in the broader market, continues to be the industrial space. A lot of those MNC, specifically MNC industrial stocks, they're still doing quite well. Hitachi Energy, for instance, about 6-7% higher. Honeywell is now up 8%. Actually make that 9% right now. GET&D, another 5% circuit on it. So interesting. I don't know where ABB is. Let's check ABB. It was up about 3-4% last I saw. Let's see if it's retaining those gains. But that's been the other theme in the market that's worked well. Otherwise, it is quiet. I mean, otherwise, no two ways that there is no leadership really coming in from the large cap space. And the tech leadership, if you want to call it that, clearly not enough. The only thing, guys, is we want to sort of take solace from the fact is that Europe is also down. Asia had a great close. I mean, a lot of Asian markets were up between 1 to 2%, but European markets right now also in the red, ignoring some of the positive cues we got on the US inflation front. So there you go. There's some red on the European screens as well. But okay, let's straight away talk about trades that you can look at right now in the last hour. Mitesh is with us as always. Good afternoon, Mitesh. Very range bound. For the bulls, the indices are proving to be a challenge. What's your advice?
Good afternoon, Surmi. I think the way you put it is very correct. It's a challenge to trade the index. So the simple response to the challenge is avoid. You're not getting a very clear directional bias. We've tried to trade the index, but without much of success, and therefore it's not showing any kind of strong directional bias. Which means that I think as we head towards the expiry and then the impending election results, you might get into wait and watch mode with some choppiness within the range. So I think the indices, would be best avoided in the short term. Having said that, I think the trading should be more stock-specific basis. I have a buy on Tech Mahindra. Keep a stop below levels of 1280 here and look for a target in the range of about 1340, 1345 to begin with. We can eventually look at higher levels. And on the selling side is UBL with a stop at about 1911 for targets of 1850.
Okay, let's move on to LIC Housing Finance. The stock is up close to about 3%. Their conference call was today. Abhishek joins in with the key highlights. Abhishek.
In the conference call, LIC management did say that demand for housing loans remains steady and they see significant improvement in all the areas of their operations. So technical write-off was about 1,080 crore in Q4 FY24, which has aided the asset quality improvement that you are seeing on a sequential basis. For FY24, the entire year, the write-offs were a little more than 2,000 crore. They expect strong financial year with respect to 2025. The tax rate should normalize towards the 19 to 20% level, and they expect the net interest margin to be around 2.7% to 2.9%. Remember that in FY24 they had a net interest margin of about 3.08%. With respect to wage division, they had a one-off provision in Q4 of about 32 crores, and they expect double-digit growth both in disbursements as well as asset under management for FY25. Back to you.
Okay, well, LIC Housing, the stock's reacting in a positive way. Abhishek, this MK note on banks and financials, where they're sounding actually pretty negative. What's the crux of the reasoning they're giving?
They are sounding pretty negative with respect to large private banks, and the key highlights of that report is they are reducing the financial weightage in their model portfolio to 15% from 30%. So they see continued derating for large cap private lenders. So they recommend investors to go bottoms up in this sector and cut exposure in index heavyweights. So they prefer lenders demonstrating incremental improvement with visible triggers going ahead. Wholesale loan demand has been depressed. Corporates are increasingly accessing the money markets for their funding requirement. So PSU banks are competing more effectively, especially post-COVID. Easy market share gain for private banks are not in the forthcoming future. So regulatory stress is also there with respect to private banks. Slower growth in profitable segments, that is the unsecured portfolio, and larger investment in tech, which would actually increase the OPEX as per them. So fair value has shrunk anywhere between 4% to 63% in last 10 years for private lenders. So they see deep cuts in index heavyweights like HDFC Bank, ICICI Bank, SBI as well as Axis Bank. Back to you.
Okay, thank you very much for that. That's a bit of an anti-consensus view coming in on banks. Abhishek, thank you very much for that. Deven Choksi is now with us on the show. Deven, what have you made of this MK note and cutting the recommended weightage in one's portfolio to just 15%?
Well, I think good afternoon, first and foremost. I don't generalize normally. I think the numbers are neither, I think, the outlook for a sector. in each and every sector, I think the companies differ from one to another. For example, I think if you have to look at the banking space alone, you find I think the likes of Kotak Bank, likes of Bajaj Finance in the NBFC, two separate companies, but I think both of them are growing at a rate of growth, I think, which is far better. They may have had the situation where the regulatory inspection issues may have come into the play, but that does not take away the larger picture of this company, I think, which is growing very systematically by taking measurable risk and not going beyond the level. So to my mind, I think if these stocks are available at a corrected valuation in the price, probably it means that I think the money gets shifted into these stocks and probably market rally to take the subsequent period of time. We remain distinctly bullish about the loan prospects, the growth prospects within that. And we believe that I think the 12 months to 20 months hereafter, the kind of Capex program which the companies are rolling out, kind of Capex program the country per se is rolling out, we believe that I think some of the larger size balance sheets would definitely attract a higher amount of loan growth going forward. So we remain relatively confident about the possibilities of making money out of some of our beaten down stocks in particular.
David, what about Aadhar Housing Finance? Yesterday was day one, tepid listing, just up 4-5%. But veteran investor Akash Bansali bought about 45 lakh shares, and that's gotten the street excited. We know it's a large player, the largest in India. Valuations were fairly attractive, but still the stock didn't generate that much excitement. How do you view it now at 360?
So again, I think I believe that that's a good franchisee in the affordable housing segment in which they are specializing their operations. They remain relatively a strong player. At the same time, I think they have got the advantage of having a cost of funds to their advantage, which is basically making the NIM relatively better in the housing finance space for them. To my mind, I think they have one better way to look at is, I think, from affordable housing to, I think, slightly premium housing space, where this company could transition gradually with the strengthening of balance sheet. So from that perspective, I think the outlook remains positive for this company as well. In general, we believe that housing finance business is expected to continue the growth rate of around 20%. Which would be the case for likes of even Bajaj Housing Finance. They may be growing slightly higher than the industry, or even for that matter, LIC Housing Finance, or for that matter, even HDFC, among the larger ones, who could possibly grow about 20% rate of growth going forward as well.
Just joking, but yesterday I think the premium for Aadhar also went to TBO Tech. So people forgot. But actually, it's for housing finance, right? Growth rates are pretty solid. They're saying 20% CAGR growth. Delinquencies usually are very low, unless you manage the business completely badly.
I think the gross NPAs are at 1.4%. Their NIMs were at 9%, but they said it's not sustainable. So even if it comes down, 8-9% NIMs. So
10 lakh crore ticket size. I mean, loans get repaid in 7-8 years, right? 20-year product. So it's just the valuation gap. It was cheap. And of course, the market forgot to price it properly when it listed. But Mahindra & Mahindra is what we focused on. Numbers just came. Actually, a couple of numbers have come since. GAIL is the other one, which we will get to in a bit. But Mahindra & Mahindra first. Sonia is here with details and the thrust of what really the numbers tell us and what that investment which they've announced means as well. Sonia, over to you.
Well, thanks a lot for that. So the numbers were above what the street was estimating. However, if you look at the breakup, right, there is a clear distinction between the auto and the tractor space. So the revenues and margins overall were above expectations, but the auto segment, despite being very strong, was offset by the weaker tractor segment this time around. In fact, what stood out for me is that the company has lost market share in the tractor segment because of the weakness that they've seen. So Q4 tractor market share came in at 39.4%, which is down 130 basis points year on year. But it's more than compensated by the growth that we've seen in the utility vehicle space. In fact, the UV segment volumes came in at the highest ever in a single quarter for M&M at 126,000 units. So what does this mean for the overall numbers? Now in Q4, it was a revenue growth of 11.5% for M&M at a little over 25,100 crores. The EBITDA went up 12%, while the margins are flat year on year at 12.4%. But if you look at what's happened in the last 3-4 quarters, right, it's been 3 quarters of stable margins overall at about 12.5 to 12.8%. So that's a good thing. Despite pressures in the tractor industries, they've held on to their overall margins of 12.4%. If you look at the breakup in terms of both the auto and the tractor segment, auto segment revenue growth was 20% this time, and the 4%, and the EBIT is also down at about 15.8 versus 16.4%. Back to you.
All right, Sonia, thanks very much for that. So that's the overview of the numbers from Mahindra. Devin, any thoughts here on this one?
Well, I continue to, I think, like this company because the kind of portfolio that they have been able to bring out in the passenger vehicle segments. The premiumization is one concept, I think, which this company has very systematically and successfully adopted. Even the new booking has attracted about 50,000 vehicles in no time, which again, I think, conveys that there is going to be a systematic use of capital from this particular booking coming in for the purpose of meeting the working capital and operating capital related requirements. I believe that the growth rate, as long as it continues at the higher level, probably I think the 23-24 kind of a price earning ratio on a trailing 12-month basis is justified. If this growth rate tapers down, then probably I think some amount of moderation may happen into the outlook. But otherwise, I believe that I think this should continue at this speed. I think at which it is currently operating. Maybe I think we can see moderation of P to around 20 odd, but that could be a buying opportunity given the kind of growth that they're experiencing in passenger vehicles particularly.
Okay, I just want to make a mention of the stock HAL, Hindustan Aeronautics. Look at that. I mean, we started with a 4% gain when we started this program. It's up 8% now. So that's a very sharp move from 4,200 levels, 4230 when we started to 4,500 plus. HAL will come up on your screen. And the numbers are basically, seem to be the reason here. Margins have come in at 40% for HAL as compared to, they were a bit around, I think about 25, 26 odd percent. So the big jump in margins. And of course, I mean, absolute Y-on-Y growth rates on top line, bottom line also look very, very strong. So of course, the stock's done phenomenally well. In any case, like most things there, but it's up 60% this year, and of course, half a year, not even half a year done, and it's been a phenomenal sort of 2024 already for HAL, but another big move coming through on this one. We'll get you details. We'll try and get you details from the presentation and some more fine print on the earnings, etc. We'll try and do that in just a bit from now with our research team. Infoedge numbers are also flashing at the bottom of the screen. Profits at profits up 18%, 211 crores. So that's 18% growth. Revenues are up 8% at 608 crores. So 8% top line and 18% bottom line growth. We, I think, have the management joining us in just a bit. Arima?
So Infoedge this time came out with their Q4 billings. So you know how real estate companies come up with their quarterly update. Infoedge also came out with their quarterly billings, and they were much ahead of what the street was anticipating. And the takeaway from those billings was that maybe Naukri, the IT business for Naukri, may have bottomed out. And that's also, there's also evidence from the JobsPeak index that Naukri comes out with, which seems to suggest that there could be some green shoots emerging in the IT hiring business. So these numbers are good. As we pointed out, 7.9% on a year-on-year basis, which compares with the 7.2% growth that the company had in Q3. But prior to that, it was double-digit. Profits have come in at 18% on a year-on-year basis, and margins continue to remain above 40%. The key is IT hiring bottoming out? Because the company derives majority of its revenues from IT. So IT hiring, particularly, and even the billings, which gives you an indication of the future growth. And there was this one interesting note which came out in March where they had indicated that maybe real estate will turn around in Q1. So we'll try and question the management on that too. But, we'll wait by for more details. For now, we'll slip into a very short break. On the other side, we'll also invite Abhiram Eliswarupu of BNP Paribas India on the other side.
Welcome back. The market is trying to make a comeback. We're up 50 points. So this is looking much better, much better. You know, the low, by the way, was made at about 1:46 p.m. But the move higher started at about 2:15. You know, we were at 22,060 at that 22,060 at that point, and from that level we've kind of moved up quite nicely. It's a very, very sharp pullback which is emerging at this point. So it's good to see. I mean, it's not one way. There is selling at higher levels, but you know there are some bids which are coming in at lower levels as well. So the range is tightened, really tightened. So the 20-day is very close by, 22,330 or so is where the 20-day is, and there are supports which come in close to about 22,000, little above 22,000. But that's the nature of how the market has been. Abhiram Elaswarupu is with us, head of India Equity at BNP Paribas. Abhiram, good to have you with us here. Thanks for your time. I don't think you have coverage on the defense space, Abhiram, or do you?
No, we don't cover defense. But I think we did. Yeah.
HL numbers
we did discuss this in the past, yeah.
I know, big numbers, big growth. So I don't know if you have thoughts or if you have soft coverage. Any thoughts at all?
Less stock specific, but much more on the space. And obviously the numbers are looking good. In fact, I would say that in general, all companies in the Capex kind of space, cap goods, etc., all the numbers have been pretty solid this result season. Now, the way we can think about this is that once the elections are over, it's fair to assume that government policy effects of probably all the sectors that we have under coverage, the most in the capex related areas, and much more so in railways, defense, and even power. So I would be long-term positive still on all these areas.
Abhiram, capital goods is so defense is one, right? But then there you got all these other names, Siemens and ABB, up 70% this year. CG Power is there, nearly lakh crore market capitalization. Runway looks pretty solid for each of these businesses. You know, transformers, railways, power equipment. Of course, I mean, there's a fair bit of ordering which is happening. The problem seems to be on the capacity front for most of them, and they're expanding capacity. But for new investors who are looking to gain exposure, is there a way in this space?
Well, I guess that they really don't have much of a choice. Do you see? I mean, the main issue for them is that stocks have run up a lot, and valuations are obviously not as palatable as they were maybe a year or even 2 years ago, and therefore you really don't have much choice but to pick stocks at high valuations, as long as you're convinced that there is a 3 to 5 year runway for growth, which I think there is. So I think valuation then becomes a secondary argument once you take that view. And I guess I'm seeing several foreign investors who may have missed the rally on some of these places are still looking to buy these spaces. So I think that the long-term picture is what is what they're considering much more than anything else.
What's been the overall read on the earnings season so far?
See, we go by just pure numbers here. Then the earnings season was, I would say, neutral for estimates. I don't think at a index level our estimates have changed a whole lot, maybe 1% upgrade in all. But if you compare the earnings season with the previous earnings seasons, I think one of the things that I've kind of noticed is the last 4 earnings seasons were all about margin beats. And this time is actually about some amount of revenue beat as well. So I think that's a positive development. Less so on margins this time. In fact, you may have seen some of the large caps have actually disappointed on margins. But revenue growth is actually a key driver for PE multiples. And to that extent, I think it's more preferred to a margin beat. So I think that's a positive that's come out of these results.
So which are the sectors, themes where we have seen a revenue beat compared to your own estimates?
Well, I think that mostly, again, back to this point that I made, the real beats have really come from CapEx areas, almost all of them. And the way in a little bit maybe on the IT side, what we saw was a little bit of a cut. On banking, it was mixed. On consumer, in general, we were a little surprised positively, I would say, especially on the consumer staples side. And it does look like maybe that sector is starting to turn around a little bit. So these are the bigger areas. I think we still have some results yet to come, if I'm not mistaken. But data that I saw captured only about 3/4 of all companies so far.
So considering that consumer staples has positively surprised you, would you suggest increasing the allocation to one's portfolio?
Well, I cannot think about it for the next 1 year. Maybe not as positive as the market would like to believe, because I still do think that if you take a longer term view on this sector, and if it's still going to remain a low to high single digit growth area, then it may not be the best place to be. And that there are several other sectors that offer much higher growth, maybe at higher valuations as well, but that's a different matter. What I would think of, however, is from a shorter term perspective, given that the results are actually not bad and that we have an event risk ahead of us on the elections, in the near term, I think that staples is not a bad place to be.
Again, the manufacturing theme, but on the EMS side, electronic manufacturing services, we had Dixon management with us in the morning after the results. You know, FY24 revenues were about just under 18,000 crores. For 25, they're saying should be between 30 and 32,000 crores. Margins are low. Margins are about 4%, but that's the industry margin. Do you have coverage here on this space, and any thoughts?
Actually, just look at the consumer durable space overall. And I think that with moving from one subsector in that to another, the first, and if you recall, we did speak in the past about air conditioning being an important area because the summer was obviously pretty harsh. And I think from there you move on to the next level, which is fans and lighting and so on and so forth, which are sort of playing out now. And beyond this, I think you move on to the EMS side and cables maybe. And the reason for that is that some of these are actually a play not just on just consumer spending, but also on real estate to some level. And spending on these areas tends to lag real estate pickup by about 1 to 2 years. So in that sense, I'm not surprised with the kind of guidance that some of these companies are coming out with. And broadly, I think investor focus will move away from the more expensive parts of consumer durables to areas such as this.
Although not cheap. I mean, they're also not cheap, I think. Yeah.
Nothing is cheap, right now.
Chemicals, maybe. We had Nimesh Chandan of Bajaj Finserv earlier with us. Abhiraman, I asked him, what's the contrarian bet right now? He said chemicals. Its valuations are built in enough comfort that even if you have to wait, of course, you're not saying indefinitely wait, but within the next 1 year or so, there is potential for these stocks to re-rate. I don't know if you have thoughts here.
Well, actually, chemicals is one place where I really haven't done a whole lot of work on. But if you're asking for a contrarian play, I would say banks. And why not, considering the significant underperformance. And I can sense investor frustration around the sector because it has not done well. And but if you come to think of what may happen post the elections, I had earlier mentioned Capex plays, and to fund that Capex, you will need capital, and banks are best placed to provide that. Now, I think where investor attention is focused on today is the fact that even the largest banks are not immune to regulatory risk. And I guess once we see off this and beyond the elections, I have a feeling that financials will actually be among the best performing sectors.
Thank you, Abhiram, for joining in. Let's address Infoedge. The stock is down close to about 2%. Seems like a steady set of numbers. 8% top-line growth, margins being maintained at 40%. Chintan Thakkar, the whole-time director, CFO at Infoedge, is now with us on the show. Thank you very much for joining in. First, if you could tell us what's the outlook on hiring going ahead? What was the performance of IT hiring and non-IT hiring in the quarter gone by? And has IT hiring bottomed out? Do you have the confidence to say that?
Yeah. So when you look at quarter after quarter, Q1, Q2, Q3, IT hiring was kind of declining. Around Q3, we kind of there was a little bit of a slowdown in the decline. Q4 has been encouraging. Q4 from the IT as well as on non-IT side. It's an early signal that maybe the worst is over, or maybe we have bottomed out. However, it's little too early for us to come to a conclusion that is this the final bottom, or are we going to start growing from where we are. Although we are hopeful about it, given where the Q4 numbers are and what the sales analytics are. So we are hopeful that IT is kind of looks like that it's kind of bottomed out.
But has IT hiring declined in the March quarter? Chintan, sorry.
No, actually, as I said, that look, I think it's been kind of encouraging, and we think that maybe it's bottomed out, and maybe it will from here on it should start growing. But will it start growing immediately, or will it kind of take a quarter or 2 quarters? I think that is yet to be seen. But the numbers suggest that the IT hiring maybe it's kind of bottomed out. So let's
to share the numbers with us, because I remember in the last conversation in Q3 you said IT hiring was down 7-8%, while the non-IT hiring was up 8-9%. Is it possible to share similar numbers for Q4?
Yeah, so I think IT is kind of it's in double-digit growth. Non-IT is also, the billings are in the double-digit growth. So both are in in that kind of a range. However, it's the recruitment consultants which where probably the confidence is not yet come back, and that may take a quarter or 2. So as I said, that look, IT hiring looks like it's somewhat better than what it was in Q1, Q2, Q3. But is it kind of is it a starting point for the growth? Yet to see that.
But IT hiring was double-digit, right, in Q4?
Yeah, in terms of our total monetization, I think we were able to kind of take that type of a growth. And similarly, non-IT was also was kind of done much better. But as I said, that consultant, which is also a significant part of our overall billing profile, I think that's something which has not grown. And sometimes that's not very unusual in that, because sometimes the consultants kind of take a lot more time. There's more time lag when they kind of start growing in a faster rate.
So how much does consultants, how much do they contribute to your overall portfolio, and what was the decline seen in the consulting hiring?
So consultants is like something like 25-30%. That's the kind of overall rate, and that kind of has been a bit flattish.
Consulting was
flat. As I said, that look, there are encouraging signs in Q4 directly from the industry, and we are hopeful that this trend will continue, and maybe we'll start seeing a bit of a more growth going forward.
Chintan, there was this brief issue in the quarter, 1 or 2 days, where some of your apps were being delisted from Google Play Store. Did that issue impact business at all?
No, actually, see, these are the apps, which are kind of, B2B apps, and I'm not too sure why they were delisted in the first place. I understand the B2C issues which Google is raising in terms of, the billing payment system that they have. And in fact, the B2C business, which is our Jeevan Sathi business, and that's where some of the litigations were there. In fact, that was never delisted, and I'm surprised to see that some of those B2B, where it really did not impact too much of our business, but they got delisted, and again they got relisted after 2 days. And
got it.
Yeah.
What about real estate? The real estate losses are still at the same level. I think in Q4 it was about 15 crore. What can you guide on 99 acres? Will it turn profitable at the EBITDA level?
Look, I think one has to really look at our billings, and to kind of clarify even on my earlier comments, I'm talking about the billings. Billings are the lead indicator. Yeah? Revenue comes from, because it's a media subscription type of model. So revenue is actually a lag indicator. Billings are the lead indicator. So when you look at billing, even in real estate, which I think throughout the year it has been growing well, but when you look at the billing and you look at the margin, in fact, there was a cash generated from the operation, and that was a reasonably amount. It's like it's 27-28 crore type of cash generation that happened from that operation. So yes, we are definitely seeing a scale of economies kind of kicking in 99 acres, and we are hopeful that that trend will also continue. We have been holding on to our marketing spend line. And the billings seems to be growing. Overall, the market is buoyant for real estate. So it's a very encouraging sign for real estate business.
In 99 acres, Chintan, have you gained market share? What does it stand at right now, and what's been the change?
Well, I am not too sure where the competition is in terms of the market share. I'm sure because the market is overall the market environment is good. I'm sure they are equally doing well. We believe that we are leading the pack, and we continue to lead the pack. And yeah, I think hopefully we will be able to kind of take an even larger lead in the coming years.
We leave the conversation here for now. Thank you very much for joining in. We look forward to a longer chat during the course of this quarter. We'll slip into a very short break on that note. On the other side, but as we do that, actually, we'll leave you with a nice interaction between the finance minister and the broking community, which took place at Bombay Stock Exchange earlier this week. The question put forth to the finance minister was this gentleman, and the question that he asked is something which might resonate with the vast majority of market participants. Listen in.
I am Praful Shah, Pilot Capital. Madam, I have a very funny question for you. As a broker, when we are putting a trade for retail investor, we are attracting number of taxes, CGST, IGST, stamp duty, STT, long-term capital gain tax. So today, Government of India is earning more than the broker. We have So, government, I am investing everything, I am taking a whole lot of risk, and Government of India is taking away entire profit of mine. You are my sleeping partner, I am a working partner with my finance, my risk, my staff, everything. So what do you want to say on this? Number two, there is one more question for you. You have removed cash component, Mr. Lodha is also there, from buying a house. In Bombay, today, if anybody wants to buy a house, is a nightmare. Because I am paying tax, I have white money. Now we have to pay everything by check. Mr. Lodha will not accept cash. So, my bank balance is purely after paying all taxes to Government of India. Again, when I am buying a house, I have to pay stamp duty, I have to pay GST, so that amounts to 11%. In a city of Bombay, when I'm buying a house, 11% goes out of my pocket towards purchase of house. So how you will assist a small person with limited resources to buy a house, and how a broker can function with hordes of taxes, where Government of India is my sleeping partner and I am a working partner with no income.
Okay.
Thank you. Thank you very much.
Okay, we have last two questions. Sorry, I told Shaina I have no answer for that, but a sleeping partner cannot answer sitting here.
Well, fireworks on Dalal Street, right? I mean, 200 plus points, and the recovery is just phenomenal and remarkable. Look at that at this point, what's happening at this point in time. You know, the move started, and I sort of made a mention of this earlier as well. 216 is the low, but I have to say the move up started at 240. 240, the market took off, and it has just kept on pushing higher and higher and higher. And that is some sort of, wild move which is coming. Today, of course, is also the Nifty weekly expiry. So maybe, that 3 p.m. move is coming and there is a little bit of action because of that. But this is just absolutely incredible, the way the market's coming back up. Which, by the way, means that we are now at 22,400. We are past the 20-day moving average and we're kind of holding on nicely. Later today, it'll be interesting to see, because of the move that we are seeing, what is the net short position in index futures. In the morning, we were looking at the data. This is, of course, it's only available at the end of the day once NSE releases it. FII short positions in index futures is not at an all-time high, but it's at a pretty high level. I mean, the highest since November of 2023. And on the other side, if you look at the client client positions, which is basically HNIs, family offices, and so on and so forth, their long positions in index futures is at a record high. So big short positions from FIs and big long positions from clients from the locals, right? The local smart money, so to speak. And in the morning, we were kind of discussing how this may resolve. Usually, you need some trigger, but it kind of resolves in the favor of the locals. That's typically been what we've seen. So it'll be interesting to see how that data is moved by the end of the day today when we get it. But these are really large moves which are coming in at this point in time. The Nifty, I just want to make a quick mention in terms of what is leading these gains. HDFC Bank will come up on your screen. 37 or 40 index points coming in from HDFC Bank. It's a very, very sharp move on HDFC Bank. So single-handedly, the biggest contributor. Infosys is adding 30 index points. Bharti is adding 20 index points. L&T, Reliance and Mahindra, between the three of them, they're adding another 15. I'm assuming you were sitting down and miking up, so I don't know what you are hearing about this. Go on.
Well, Prashant, as we speak, the Nifty is up 200 points, but it's such a volatile day of trade. Just an hour back, the Nifty was down almost 150 points. So we've seen this 200 points swing on the Nifty itself at least 4 times in a day today. So that's the kind of volatility we've seen in the market. So I don't know how traders are trading this market. I mean, good luck to them if they're making money in such volatile markets. So again, from a purely Nifty point of view, I guess we are closer to that upper end of that resistance of 22,400 level. So need to see as to how that stands out. So maybe the last 20 minutes could be quite crucial there. But from a flow perspective, again, it's a mixed day of trade. We've seen the trend of FI selling, so that continues. But selectively from a domestic side, there is buying into select metal limbs as well as the auto stocks as well. While the Nifty is in a big move throughout the day, the consistent outperformer has been the broader market stocks. A lot of broader market stocks have outperformed again in today's market, and we are seeing big reactions to the earnings as well. So HAL is up 10% after very strong numbers. At the same time, GAIL is down 4% on a slightly subdued number. So the sharp earnings reactions continue, but this kind of volatility has been massive. Like almost every hour we've seen a 200 points rally on the Nifty. So that's the kind of a day which we are countering in today's market.
Absolutely, Nimesh. And that 3 p.m. factor that we always talk about on expiry days, I mean, today it really showed up, right? Because this was a complete pole vault. And stocks are still gaining ground. I mean, including some of the names like an LTI, Mindtree, L&T. These stocks are still sort of rising higher even as we speak. By the way, the Nifty now is trading off the 20 DMA and the 50 DMA with this sudden pole vault that's happened. Both those levels come in around the 22,300 mark, and we are trading a good 100 points above that. Now, Nimesh, that's the market. It's absolutely crazy volatile. What about individual stock names? What's the buzz like today?
Well, the first stock on my list today is Apollo Tyres. The stock has sharply come off days high. Despite multiple upgrades post numbers and post management commentary and buy flows as well. I think the street is fearing now a large block deal very soon. The private equity investor holds a large chunk, and there is a buzz that maybe they would sell up part of it in a block deal very soon. So that's the reason why that stock has sharply come off days high. The second stock is CG Power. Even that stock is under pressure today, largely on the back of multiple block deals. I understand the domestic mutual fund was a seller in today's block, so the disclosures could be quite interesting in CG Power today. The third name is Sona BLW. That's been consolidating of late. But now I understand the selling pressure from a leading domestic mutual fund is largely over in Sona BLW. So watch out for delivery-based trades in Sona BLW. And the last one is Manappuram Finance. That's been buzzing in trade today on back of pure, very strong buy flow. So looks like some bit of FI interest is back in Manappuram at these levels.
Thank you very much for that. Mitesh is now back with us. Mitesh, at 2:30 you said the market was challenging. What do you do now with the 200-point sudden pop? Still stay away?
I've been so wrong in the last 3 days that I can only possibly smile at it. But yeah, this is the market we are in. So on the index, I think between the two indices, the Bank Nifty could offer a slightly better trading opportunity, given the fact that it's just trading and moving above the pivot levels of 47,850 levels. So, the spot is about 47,960. So take a 150 point kind of a stop loss below 47,800 and take a long. And on the stock side, I have a buy on Britannia with a stop below 50 for targets of 5,300. And a buy on Dalmia Bharat with a stop at about levels of 1765 for targets of 1,830.
Okay. All right, Mitesh, got that. Thank you very much for those final trades. Let's look at some more earnings that are catching the market's attention this afternoon. GAIL has been a bit of a disappointment. The stock has also been under pressure. Let's go across to Sonal to understand the details and the inner metrics. Sonal, how's it looking?
Well, it's a Tom-town miss coming in for GAIL, and it was led by the revenue miss this time around. If we look at the segments, it was weaker performance in the gas marketing segment, the gas transmission segment, but the petchem segment saw good recovery on a quarter-on-quarter basis. Overall, revenues declined. Margins are lower by 20 basis points to come in at 11%. The expectation was of 11.6% margin. Profits are down 23% as well. There is another income component as well, which has come in lower on a quarter-on-quarter basis at 638 crore rupees versus 812 crore rupees. If we talk about the segmental EBIT, natural gas transmission EBIT is down 19%. That's one of the reasons for the fall. Natural gas marketing is down 26% on a quarter-on-quarter basis. As I said earlier, petrochemicals is done well. That is up 323%. LPG is also up 26%. Now, in some of the other businesses like CGD business, the E&P business, the company has taken a one-time provision which has led to a loss in the other segment of around 70 crore rupees. Despite this miss that we have seen in Q4, FY24 has been one of the best performances for GAIL if we look at a yearly number. But yes, on a quarterly basis, it has missed estimates.
Thank you very much for that. But the one which clearly has not is HAL, and that's been another, turbocharged stock. Post the Q4 numbers, very strong margins. Upasana is here with the fine print. Upasana.
The company has reported a strong revenue growth, beats street estimates. The company has reported a strong revenue growth of almost 18% on a Y-on-Y basis versus 13% is what the street was estimating. The margins have also expanded sharply from 26% to 40% on a Y-on-Y basis. And in terms of PAT, we are seeing an uptick of almost 52% and it stands at 4,309 crores. The company's order books also looks healthy and strong at 94,000 crores with additional major orders expected during FY24 to FY25. Company says that despite major supply chain challenges arising due to geopolitical issues, company has met the expected revenue growth of 11% versus 9% in FY23. The company has also received fresh manufacturing contracts worth 19,000 crores and repair and overhaul contract worth 16,000 crore in FY23 to FY24, aiding such a strong revenue growth.
All right. Thank you very much for that, Upasana there. I mean, it's just a phenomenal number, 40% margin. That's what HAL, Hindustan Aeronautics, has managed this time around. And the market is saluting that stock after what has been a tremendous journey. Let's pull up a 1 year on Hindustan Aeronautics, easily above, more than 250% sort of a gain. Let's pull up the 1 year chart as well. Just around 200% in the last 1 year. And the dream run continues. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us now. Mayuresh, hi, good afternoon. The thing is that, it's always scary to buy at heights and to buy stocks which are these huge momentum movers, and HAL is one of them. But then what do you do? Here's another good quarter. So what's your advice?
Afternoon, Surbhi. Oh, absolutely, yes. I think the move has been accentuated by numbers, and numbers have been doing the talking or the price action moves for HAL. Obviously, the margins that have come through at 40%, the expectations in terms of both achieving scale through the order book that they have, close to 10,000 odd crores, expectations in terms of the operating leverage getting played out. Because as the phasing out happens of aging aircraft, like the MiG-21, the MiG-29s, the earlier Mirages as well, the monopoly in the Indian aerospace for HAL will continue. Also, the repairs and maintenance part of it, or the maintenance contracts, will also start coming through, both in terms of the fighter projects as a platform and the helicopter projects as a platform as well. So I think it's firing on all cylinders in terms of a very robust order book, revenue visibility, operating leverage, achieving scale. What do investors probably do? I think what we are looking at Markets with India, I think the price move has been too sharp. It's trading way above base levels from where we see at. Valuations also a little bit on the higher side. But I think investors who have got into the stock early may continue riding the momentum and let the market itself decide, because as a risk management tool, we probably take out the nearest average, the 50-day moving average, as an indicator in terms of an exit option. So unless it breaches that on extremely high volumes, one can continue enjoying the momentum on this one.
Okay, we have to take a break here. We're coming back with you in just a bit. I want to just make a quick mention. You know, it is some part of the capital goods, equipment, kind of value chain which is buzzing, and this has been true for the last many days, right? So you don't always have to just look at the ABB and Siemens, etc. Look at bearing companies today, and I can spot three. All right, I mean, all high-quality companies. If you can pull up Timken India, Timken is up sharply this afternoon. All right, that'll come up. Then you look at something like a Schaeffler. Timken is up 5.5%. Right now. Schaeffler India is the other one, which I think is also up about 5-6%, if not more, 7% on your screen. And SKF India, right? So these are all bearing companies, and there's a sharp move up coming through. Very much a part of the entire sort of industrial upcycle that we're seeing right now. And not just this. I mean, you look at KEC and KEI, stocks have done very, very well. You look at something like a Genus Power. Of course, the rail companies, Titagarh, Texmaco, even a PSU like Ircon is flying away. So manufacturing, basically, if you want to sort of go one step removed, I mean, that's the area where the market is finding a lot of interest and flows into. We'll take a break. We are back with more on the other side. Stay with us.
Well, and away she goes. It's now 220 points higher on the Nifty. Midcaps are keeping in step. So while the frontline indices have moved up 1%, so has the midcap index. So the advanced decline ratio hasn't, improved that dramatically. It's still about 1380 stocks advancing for about 1,000 stocks declining. M&M is the top Nifty gainer today. They've also announced a very large investment of 12,000 crore rupees in the EV business, which should fund them for the next 3 years. Mayuresh, what have you made of this fundraise plan by M&M and the investment that they're planning in EV?
So I think a step in the right direction, Rima, because what you're probably seeing in terms of the traction that M&M has derived over the past few quarters, the kind of order book that they're sitting on, the demand for their new vehicles as well. They've obviously accentuated the supply part by doing 50,000 odd units. The new EV unit which will come through with 10,000 units and the investments that they're doing in the farm equipment business as well. All steps in the right direction that will prop up earnings in the right direction over the next few quarters. Having said that, I think a rebound expected in terms of the farm equipment business. The tractor business should show some element of respite as monsoons normalize this year around. And therefore, I think on a consolidated basis, with fresh investments coming through, existing order book, expectations of stable margins with input costs remaining extremely stable, and the new investments probably in the right direction, ensuring that the next few quarters as capacities come up, the return ratios start getting reflected in the new verticals, including the EV vertical, should be something that investors can look forward to. So yeah, I think anybody holding on should hold on. It has got a very decent EPS RS rating as we see it at Markets With It.
Okay, finally, just sort of last words, Mayuresh. As we sort of wind down and get into the last leg of the earnings season, any one interesting mid-cap that you spotted where the earnings were that good that, you've actually taken a fresh call of fresh purchase?
So to a certain extent, I think Welspun Corporation is something that will continue like it. Our take is that order book is very, very decent. Expectations in terms of margin performance on the line part of the business, the piping part of the business should continue doing well. The water storage business with the sensex acquisition, dented reduced to 500 odd crores. An expectation of very strong earnings momentum expected to continue for all these verticals in India, in the Saudi Arabian business as well, should augur well from an earnings perspective. So Welspun Corp is something that we like at Markets.
There's some disturbance, perils of work from home at times, I guess. So we got most of what you said, but thank you very much for joining in today. Really appreciate you being with us on the show. Well, with that, let's start winding up what has been a roller coaster session. But for the bulls, they're ending the session at the top of the roller coaster, not at the base of it. So that's the good news. 200 points up on the Nifty, an index which was struggling for the better part of the day, around 22,130, 140 thereabouts. But then came the roaring rally starting about 245, and then everything really changed. So, let's talk about the constituents of the rally. In pole position is actually Mahindra and Mahindra. After the numbers came through, market liking the response, and especially the new bookings they're making on some of their newer launches. Tata Consumer, about 3% higher. We had a decent show actually from a mix of consumer and IT today. So Tata Consumer and even Titan, late mover but moved in style, 2.5% on the upside. Britannia, when we're talking consumption, also did well. And then you have, of course, the tech names, LTI, Mindtree, Infosys, some of these Wipro, some of these companies have had a pretty good session, up between 2 and 3%, depending on which stock you are looking at. Recovery in other auto stocks as well, actually. Hero Moto was on the upside. And then, of course, lots of help coming in from the banks in that last leg, half an hour. So HDFC Bank, for instance, up about 1.5% by the time we're closing. ICICI Bank putting on about 0.5% as well. SBI was the one that didn't play ball, still ending down with a cut of about 1% thereabouts. But a big move by the movers on the upside.
Well, PSU Banking Index was the only index today to end in the red. So State Bank of India under pressure, but even something like a Bank of India was down 2%. A couple of the other financials like Bandhan Bank, Canara Bank, Ujjivan Small Finance Bank, all ending with losses between 3 to 5%. But on the way up in the broader markets, Hindustan Aeronautics, steals the spotlight with an 11% up move, 40% EBITDA margin. So just piling on gains, 65% rally for HAL since the beginning of the year. Aadhar Housing Finance, 10%, one of the biggest volume movers. Oberoi Realty and railway stock. So Titagarh Rail, Ircon, Texmeco Rail, all up 6 to 10%.
Well, I think, without argument, this has been a great day. I mean, actually, even without the large caps performing, The broader markets was just absolutely going great. And of course, the large caps joined in the last 45 odd minutes of trade. So really great session, almost 200 points higher after many days, a very sort of hesitant, down kind of sideways market that we've been in. Well, it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for staying with us. Markets forward, though, will pick up with all the action in just a bit from now.